focus today is going to be on a specific panel trying to compare two of the biggest blocks of generators of financial innovation, which is the US and the EU. And we have a very illustrious panel here that will help us shape and describe the situation, both from the outside and from the inside. And I will introduce them to you in a second. What I'd like to do, though, is ask the public to raise their hands on a question. Who do you think is the more innovative regulator? Those who think it's the US, please raise your hands. One. Those who think Europe is more innovator as a regulator, could you raise your hands? Who doesn't like both of them? Raise your hands. Okay, so thank you very much. So the panel we have here is a very, as I said, illustrious panel. We'll start off with David Reiling from the CEO of Sunrise Bank. We have Joanne Barefoot from the Alliance for Innovation Regulation. We have, and I'm sorry here, Olga, I'm going to mess up your name. Okay. Olga Skorobogatova. Yes. Okay, from the Bank of Russia. We have Claude Marx from CSSF in Luxembourg, and then we have Paul Byrne from Currencyfair in Ireland. So thank you very much for all of you to be here. So I'm going to kick off with one question. Who's best, the US or UK? US or Europe? Can you start off, please, David?
I'll start you off. I would say at the moment, Europe is far ahead, and I would say specifically the UK seems to be in the lead in terms of, I would say, embracing...
So entering into the Brexit discussion right away. Okay,
well, yeah, that aside. But Europe has really embraced fintech, and I think in a very abundant way. Where the US has taken a more scarcity approach or a reluctant approach, I think it's evolving now, but it has a ways to go, I think, to catch up with Europe.
Joanne, what do you think?
I agree with that. The US has a challenge partly because we have so many regulators. We have many agencies, sort of a multi-headed creature, not sure who's in charge in innovation. And we have also a very complex financial system with thousands of banks, which is unusual. One of my messages today, though, is the US is accelerating. There's a lot going on in the US innovation space by the regulators. So I think we're going to see some change faster than people may think.
Thank you. Olga, the perspective from the outside, you're obviously the regulator of the Russian regulator, obviously seeing both sides in an equal way. I'd love to hear your view on that.
I think I am just one who is not in Europe and not from America and not from China. Because when we are looking on fintech and regulators and regulations, really we are looking all countries. And 4 years ago, we created the fintech strategy, being in Central Bank of Russia. How we did? We look on all countries, all regulations, and I think we took the best. It means that we tried to have some kind of balance between different experience already and different innovation approach of regulators. For me, the most close to the customers and to regulations is the experience of UK. When we think on other countries, for example, for us, USA is really, as my colleague said, has federal regulation and state regulation. Sometimes it's very complicated. In Europe, we have very well-defined and developed regulation. And we also use a lot from European regulation. If you take China, it's another story at all. It's practically all regulation is state and very tough. And regarding different services, we took some experience from different parts.
That's wonderful. Claude, from the inside, which one do you have?
Yes, I think that I would agree with Olga. You know, Europe has a series of well-established rules for banking, for investment funds, for financial markets, for securities regulation. And I think the position of the European authorities in terms of innovation has been not to rush and try to regulate it all, but try to see where the existing framework needs to be accommodated. And I think this hold approach actually has served well the fintech industry.
Okay. Well, can we hear now from one of the fintechs and see how well served were you?
Well, I think you have to look at the European market as different markets. I would say, first of all, Europe is much more sophisticated than the US. The US is still looking at 50 states. Each state has been a regulator, at least in the payments and e-money space. So you have a lot more regulators in the US, a lot more politics at play individually. Timelines to get licenses are a lot longer, like New York is 3 years plus, California is up to 2 years plus. So, and President Trump did try to bring in a law to have a federal licensing system for e-money or payments, and that didn't get any traction. So I think the US is now looking to catch up. And in Europe, the UK was the first and is the most advanced in terms of allowing people do things with a higher risk tolerance. The EU generally, excluding the UK, is much more risk averse and therefore looks slightly differently at regulation and looks at it much more from a lower risk or zero risk perspective. Although within Europe, the Baltic countries seem to be adopting more of the UK model in terms of being a bridge, whereas countries like Belgium, Ireland, Italy, Spain are a lot more conservative and a lot tougher. So we're regulated in Ireland, but we're regulated like a bank would be as opposed to a payment company. So even within the EU, the rules aren't actually applied equally or across the board. So Europe, because of so many different countries coming together, is getting better consistency. But the difficulty is they're all looking at the UK and thinking, oh, I wish I was more like the UK. So there's a lot of pressure. And even heard on the previous panel there between two EU countries about why come to my country. You know, so there is different rules in Europe. But I think for consumers, Europe is better as well.
Interesting. We had a few other panels on regulation beforehand. I think one of the things that emerged is obviously this fragmentation you described about the US and European regulators. Yes, they're both fragmented, but I think in the US, I think you have eight federal regulators and then 50 state regulators, or
Depending how you count, yeah. 8 to 24.
8 to 24, plus the 50.
Touch it somehow, yeah.
So that makes it incredibly hard if I want to start a business. I think Europeans, we complain about having so many regulators in different markets, but that's still a good approach. The question I have is not just a number, but what about the mindsets? How do you compare the mindset of a European regulator versus that of the US regulator? Now, I know I'm talking about a multiplicity versus another multiplicity, but in general, would you think that the Europeans are more aware of innovation in financial services, or are the Americans more aware of innovation? Joanne, would you like to kick this off?
I would. I think that it is fair to say that in the US, there has not been a top-level agenda on innovation among our financial regulators until very recently. There's a lot of reasons for that, part of it being the fragmentation. I do think this is changing, and for example, our new chairman of the Federal Deposit Insurance Corporation, Yelena McWilliams, has made it her top priority to transform how they supervise banks during her term, which has another 3.5 years in it. That's her words, transformation. I have a podcast show, Barefoot Innovation, and I recently did a show with the controller of the currency and one with the chairman of the FDIC, and they had just come from lunch with each other and with another senior regulator. They're regularly meeting together to try to create that connective tissue among the agencies that is traditionally been fairly weak in the United States. So I think they're really starting to move, but they're not. Europe has enjoyed, and so has Asia in parts, a virtuous cycle where there's a welcoming environment for fintech, therefore a lot of innovation, therefore the welcoming environment is smart and is learning constantly, and that is what I think has gotten the rest of the world ahead of the US.
So your vote on mindset is on understanding of innovation is towards Europe.
Yeah, I think the US is ramping up rapidly, but I think it has lagged, yes.
Shall we ask David also?
Yeah, as a bank that gets regulated very often, I would say the tone at the top within the comptroller and the head of the FDIC, they're having those conversations. And their staffs are having those conversations. When you get down to the staff or the examiner level, for example, in December, I gave what I would call an all-staff meeting presentation to the central district of the OCC to explain to them what fintech is, how it works, what it looks like, what those user stories and cases are. So the messages haven't quite made their way down and through.
What reactions did you get when you presented?
So some as you might see, I had the age range in the audience was from, let's say, very experienced to more new, and I would say the newer, more shinier faces were more excited. I would say the people who, there were a few crypto people in the audience, which those folks usually get pretty quick in terms of what your reaction, and US cannabis is a big deal as well. So there are a few items like that. But the fact is that there is some excitement, I think, in terms of learning more what it is, but it was really starting at a very basic level of what's a user story, what's a use case for fintech in the US on how we use it and where we find it.
So I think everybody remembers the Zuckerberg's presentation to the Senate and the questions that he was asked and so on. So I always think that, is that the level of the US regulator? I'm sure that's not the case, but it was a startling thing. Olga, looking from the outside and looking from up on top of the world, looking what's happening, who do you think of these regulators actually understands the opportunities and challenges with fintech better?
Really, it's...
And don't say the Chinese again, please.
Yeah. Okay. Really, it's very, very complicated to understand fintech and development being in regulator for many years. My experience is unique. I worked for commercial banks for 20 years, and I came in Central Bank of Russia just 4 years ago. And moreover, I worked before in Société Générale Group as well. I have, four different opinions, commercial, foreign banks, Russian business, and so on. And it was very interesting. When I came, 2-3 months, I felt like in another world. Because to be honest, regulator and business, unfortunately, till now, it's very different. And even in mindset, mostly in mindset. Mm-hmm. Why? Because, of course, all regulators want to minimize risk, to have good competition, and to regulate everything, each detail. In European Union, I think really people did a good work regarding the payment directive, the data protection law. It took a lot of time, but nevertheless, really, they did a very good work because a lot of things already were developed. But if you go to another country, as you said, in Russia and China and so on, mentality and really our experience is different. It's not sometimes the same like another country. Mm-hmm, mm-hmm. And we have to take into account it. And for example, in Russia, when we looked on our level of competition, it's low if we are speaking about the banking sphere. Why? Because we have just 1-2 big banks. It's not big tech, it's big fin, which really covered practically all activity, mm-hmm. including not only banking, but also medicine, food, and other things of ecosystems. And for us now, it's the question how to regulate the activity inside ecosystem and ecosystem at all when they service customers with banking, with finance services. It's the question which now for us it's number one because it's already out of date to regulate or to give license just for banks.
Fantastic. But in your view, therefore, which one of these two markets is more understanding of technology? Is it the European market, or is it the US market?
UK and European. For us, yeah, I think it's more clear. And as I said before, we took some points before the European regulation inside our regulation.
It's good to know. Paul, do you agree? Which the Europeans are more aware of innovation?
Oh, definitely in Europe. And I think as David said earlier, like the mentality in the US hasn't got down to the low level. And I think just a simple example would be in Europe, you obviously have an inspection from your regulator on a frequent basis. Okay, it's on a cycle, it's a 3-year cycle, and then there's an intermediate, and it's very systematic and a systematic audit. In the US, you have a state audit, and guys come into your office and literally go through individual transactions. Mm-hmm. So it's a different mentality. Everybody wants to protect the consumer, which is correct and right. But it's just done differently. It's a very technology, high-level, systematic approach in Europe. And in the US, it's very low-level individual transaction auditing. So I think Europe is much more innovative. Technology in the US is quite innovative, but it tends to be unregulated technology innovation. Okay, so you take, so look at Plaid and people like that, for example. Very sophisticated technology, but it's not actually regulated like a consumer payment system or a bank would be regulated. So a lot of innovation in the US, but not really in the regulated space.
So it's interesting. So Claude, obviously, I think you think that Europe is better than, but do you think that European regulators are doing enough to be aware of what technology impact, the impact technology can have on the industry?
Yes, I think the mindset is the right mindset. Europe is sometimes criticized for being too bureaucratic, but I think here we have a case of being pragmatic and actually having the right purpose in mind. If you think about PSD2, for instance, one of the main objectives of PSD2 was to further competition, further innovation. If you think of plans now to provide a framework for crowdfunding, this is being viewed as serving the purpose of helping the Capital Markets Union. So these are very good objectives. And I think from a national regulator perspective also, there are different systems that are being applied. The UK has been offering sandboxing for quite a number of years, so have the Netherlands. Other authorities have taken a different approach, but all authorities in Europe have a pro-innovation approach, make themselves available, apply proportionality. So there are different systems in different countries, but overall it's a good situation.
Okay, so thumbs up for Europe. One of the things that strikes everyone in the innovation space is the fact that obviously America is the biggest market for fintech innovation as far as the capital investment is concerned. And this seems to be happening despite the regulator not being supportive. Do you have any views on why that is the case, David? Do you want to have a few words on that? Why is it that American fintech is so much bigger than fintech and all over the world?
So I think that's the legislative agenda. So if you look at, for example, Zuckerberg in front of the Senate Banking Committee, it's all about big tech. And the focus of legislation and data privacy is around the Googles and the Amazons and the Facebooks of the world. You're not seeing that same dialogue at the fintech level. And so I think from that standpoint, there's the focus kind of politically and legislatively. I would also have to say that in that space, we don't have a good regimen from a regulatory system in which to not only put on new regulation, of which is starting to be talked about on how to do that, but also to get old and antiquated legislation off the books in which to free up. We still have rules in place that just don't make any sense relative to fintech and the scale and the lack of geographic boundaries that fintech brings. And so whether it's in the Community Reinvestment Act, whether it's in regulations around savings transactions and what types they need to be, these types of regulations are just antiquated and they need to be removed or segregated in such a way that they don't matter in certain circumstances. And we really don't have
So you're still saying that there's a regulatory environment that's not great in the US, but then we are seeing the biggest companies, the biggest valuations, the biggest successes in fintech being US companies so far. Is it that fintech doesn't care about regulation? Or is it that that's going to be a bubble that at some point will be impacted by a more savvy regulator?
I think it's just going to look different. At the moment, you have very much a partner model. So you have a fintech and a bank that are going to partner to deliver those services, products and services. I also see a lot of the success in fintech in the US that products are embedded in a particular service or a product, much like an Uber effect. So I take an Uber, the payment is taken for me. I think if you look at like an Amazon Go store, I just take it off and out I walk. And that'll be the same with places where we, as Americans, already provide their information that will meet KYC. They can immediately get a financial product or service because it's built into the service or product.
So is it accurate to describe what you said is that there's a blurring of lines between the financial service and the non-financial service in the US a lot more than it is in Europe? Joanne, would you agree with that? Is that what's happening?
I do agree with that. And the federal regulators we were talking about before, the national regulators in the United States, don't directly regulate non-bank fintechs. They're bank regulators with partial exception of the Consumer Financial Protection Bureau. So a lot of this engine for fintech investment in the United States is coming in. Obviously, we have a giant engine of VC capital coming into the space, and the companies are getting a foothold at the state level because that's who regulates the non-banks. And some of the states are being very proactive. New York, for example, had been, I think, widely perceived to be skeptical of a lot of the fintech innovation, and that has really reversed. There's a new supervisor there, there's a new innovation group there. And so I think we're seeing companies getting a foothold, but then as they grow, they run into the difficulty of the growth model in the United States if you have to get 50 different licenses to operate and so on. So I'm optimistic for the US. I think that not only will it catch up, but it'll be a real player. But right now, some of the investment that you're seeing is going into companies that are actually starting up in Europe or Asia instead of the United States.
So Claude, if that's the case, if Joanna is right, what can the regulators in Europe do to help VC money flow into fintechs beyond being smiley faces all the time?
Yeah, no, I think that you know the area where there still can be perfection is provide certainty with regards to the classification of certain instruments. I mean, there has been a several-year-old debate now in Europe as to whether tokens are securities, whether cryptocurrencies are financial instruments, or whether they are not. And I think you know what Europe still can do to improve is to provide certainty with regards to what should be regarded as a financial instrument or not, and what are the consequences attached to that. But I think the overall position of the European regulators has been a good one and has been a nimble one. And fintech has evolved positively in this environment.
So you mentioned the UK regulator, and we've seen that they're very proactive in supporting fintechs, and they have their own sandboxes, and they have a fast track onboarding, et cetera, et cetera. So, and they also seem to have the biggest fintech market in Europe, as far as VC is concerned. So do you think that the regulators could be doing something more to actually support that than just, as I mentioned, not be supportive in that on the regulation side?
I mean, you can debate this forever, whether you should have sandboxing or you shouldn't have sandboxing. And I think here also you have to distinguish in Europe between smaller countries and larger countries with a big consumer population to try concepts or not. Because basically, if you are not under an EU regulatory framework, you can only try something in a sandbox in a national market, and then that market has to be of a certain size. I think the UK market clearly is big enough to do that. Other markets would be big enough also, but I think it's not all about you know, this is one tool, and I think there are other tools that are very valuable. Providing guidance to the market, for instance, in terms of risks and opportunities. The BaFin in Germany has published a paper about big data and the use of big data in the financial system. We have published in Luxembourg a white paper about the use of artificial intelligence. We've also issued a suite of rules with regards to the use of cloud computing. And I think you know, this smart regulation, so not hard regulation, but providing guidance, drawing the attention of people to risks, but also opportunities, how to well use certain technologies. I think this approach fits very well with the fintech space.
Thank you.
Could I add to that?
Yes, of course.
A quick comment. We've all been saying that the UK has been at the forefront. Singapore has also really been impressive globally. But the UK, we're talking about two things the regulators need to do. One is create a welcoming environment in how you regulate fintech and manage the risk. And the other is how the regulators use technology themselves on the agency side of the reg tech. Mm-hmm. The UK has built, I think it's clearly the world's leading model. In the audience today, we have Nick Cook, who heads innovation at the Financial Conduct Authority. And they have been pushing forward on both sides to not only regulate fintech in a smart way, but to think about how to transform the regulatory process itself, drive down the costs. I think they have the most interesting project in the world right now on their digital regulatory reporting project to try to think about how can we begin to create machine-readable, machine-executable regulations. As that model begins to succeed, it'll greatly benefit the fintechs because it'll make it easier to comply with all these rules, and it will help everyone.
Interesting. So can we ask one of the fintechs, Paul, if I can put you in that box? What helps a fintech establish? Is it the access to a friendly regulator that is creative, innovative, or is actual access to investors?
I think in reality it's access to a market. So the UK obviously is a homogeneous market. It's very large from a consumer population. Always has been a high-tech market, always quick to adopt technology. So it was a welcoming environment for fintechs with or without the FCA help. Okay, so the FCA obviously have made it easier to get up and running there. But generally speaking, it's access to a market or a use case or a business plan, and then access to investors. And obviously the UK is the second biggest investable market for fintech investors after the US. But one thing I would say is, from a European regulation point of view, people who, like us, who are already regulated, we're not advocating for lower bar of regulation, because it would just takes one bad outcome to set back consumer confidence to adopt new products and new technologies. For example, in the UK, the number of challenger banks is exponentially growing. The number of bank accounts challenger banks are issuing or opening is exponentially growing because it's crossed the chasm now in terms of adoption. Had one or two of those banks failed earlier, the adoption may not have been as great for everybody coming behind. So we're not advocating lowering the bar for regulation. I think we want a more consistent implementation across the EU broadly of EU rules. And I think the EU is learning from the UK actually, and looking at things that didn't quite work out as well in the UK. And you can say the same everywhere else in the world. Like, we just got a license in the UAE, and it's very clear the way the license has been granted and the due diligence process that they've learned from the FCA, the EU, and Singapore in terms of pulling the best of the best. A bit like you said about Russia. You look around the world, and everybody's looking to China. But in China, the regulation model is totally different, because in China, every transaction is regulated, not the individual, the actual transaction itself. And that's simple because you've got a one state, one party government. So it's a bit easier.
Yeah, that does help, I think.
It does help.
And also 1.3 billion people helps too.
Yeah, exactly. Bigger market. Yeah. But so we would say the EU should proceed and keep on the path it's on, which is bringing innovation in a very structured way. Because as things like faster payments come in across the EU and same-day SEPA, that does increase systematic risk as well in the payment system. So you have to be careful about regulation.
That's very good perspective. Olga, from the outside, what are the learnings that you want to do to actually learn from how to help growth of innovation in the Russian market, looking at examples of the US and the European Union?
First, I will come to a last example of China, if possible, and then come to your question, okay? It's a very interesting story. When you will take the Chinese example, you will see that they started practically as free market for Chinese big tech company, like Alipay, Alibaba, and so on. But then, after some years, they came to the very strict regulation together with them, how to regulate the market. Not only other players, but first of all, how to regulate big tech companies, which more and more started to service banking instead of big banks. And I think everybody knows the case with Union Pay card. Unfortunately, practically they disappeared because all big companies in China already covered this market. When we are speaking about Russian market, in our strategy, we think that we should provide, as I said, some kind of innovation growth, but also with competition growth, because we have two problems. In comparison with European and American market, really it's maybe historically, but as I said, we have just 2-3 big players, and it's a problem for us. And what our banks really do when they find out very good startup, they just bought it or buy immediately. In 6-9 months, it's already inside the bank.
Yeah.
And to be honest, we don't have such story like in USA, when you have a lot of fintech startups, a lot of big tech companies and so on, just because our banks have a lot of investment to buy everybody everything. And for us, for regulator, it's a big problem. And as Claude said, in our case, we also have to be smart regulator, not just to regulate, but how, on the one hand, to keep the same level of banking investments in innovations, but on the other hand, how to protect population and business and to have more clear and more open market for innovations. And what we did and doing now, we launched 3 big projects on the regulators level for creation of infrastructure platforms or projects together with market, not only like regulator. It's fast payments, like in Europe also. Really people doing the same fast payment platform for all participants, not just for banks.
Yeah.
For business, for people, for everybody. The second is biometric platform, also like infrastructure for face and voice and hand recognition everywhere. And the third one, we call it digital profile, where you as a person can receive all the information about you from the state data house. Usually in Russia it's a problem to receive not in paper, but just digital information from different bodies and state government organizations, just in order to receive after that the business or banking services. It's 3, and I should say that really big banks, of course, said that it's not our task. The reaction of business was from big business. Please, regulator, don't touch us. We have very good share of market. We have very good customer population and so on. Don't touch us, please. But of course, it's not in our interest to keep the same line. That is why we decided to do projects.
Well, that's very interesting. Thank you for that perspective. Some of the discussions that we had in some of the previous panels is big tech and how big tech is coming in. And we know that big tech isn't really interested in the financial income. It's more interested in the data that financial transactions generate. Now, should the regulators in both markets, the US and the UK, EU market, be more not only aware of the issues with data, but actually be regulating data from the financial perspective? And I think the FCA has looked into that already. They had some workshops in the last few years, in fact, looking at that. What is your thought, Joanne, about this? Should data be part of your game?
I think in the United States, inevitably, we are going to see years right ahead of us of regulation of big tech. Big tech has not been highly regulated. Data and privacy are not highly regulated in the United States compared to Europe. And I clearly think the tide is turning on that. We'll tell a little joke with apologies to Facebook. There's a picture online of a boy sitting at a computer with Mark Zuckerberg looking over his shoulder. And the boy is saying, "My dad told me you're spying on us." And Mark Zuckerberg says, "He's not your dad." And that's sort of the mood of how people are looking at big tech. People don't understand how their data is being used. So I think the way things change in the United States is the same as everywhere else. When you've got a legislative change coming, it's going to evolve over years. It's not even really clear what agencies are in charge of most of the facets of this in the United States now. But I think that there will be a lot of overall regulation of data and privacy, which will have big impacts on the financial sector, but they will be secondary to the primary.
So, Claude, are you gearing up to become more savvy about data and be able to regulate data?
First, on the framework, I think that everybody has said about GDPR, so I think we have a very strong data protection framework that applies equally to the financial system. So there's no need to add any layers to that. But I think that data is still underexploited in Europe in general.
Underexploited, so you mean underused by potential commercial entities?
It's underused, and I think that the I think banks will be learning fast in Europe, because the day when the Amazons of this world and the PayPals of this world make use of the data that they have, and they don't actually have to buy new data, they have data from their customers, the day they make really big use of that data to do commercial loans to small and medium-sized enterprises, or also to private individuals, or to roll out other basic services to those people. I think that at the latest, then banks will realize that they should be making better use of big data.
So you're saying actually you don't need to regulate it more, regulation is enough.
I can confirm much more.
You need much more.
No, yeah, they don't need much more, because really it's very developed regulation. And even sometimes when I discuss these points with my European colleagues, they told me maybe it's better to release to some extent, because it's too tough for business. Not only for banks, but for business and for big tech companies. But in any case, I think security aspects and a lot of data protection law issues, it's so important for person and for business that might be better to have very well-developed regulation like European colleagues did.
So it's interesting, because if you look at the US market, which data is relatively less regulated than Europe and the European market, there's a perception within, potentially, and I'm asking one of my US friends to confirm this, the average US person does not feel that their data is safe with their banks. But if you see, and that, therefore you only have 45% in fintech adoption in the US. The average European feels as every time they log into a website is GDPR, the data is here and there, there's discussion about that, and there's 50, 60, 70% digital fintech adoption in some certain markets. The average in the EU is above the 50%. So this regulation, in fact, it actually engages the customer more. What would you think about that, David? What do you think? Is that potentially something that actually more regulated will actually help your sector, your industry?
I would agree. I mean, if you just take a look at any browser, particularly coming to Europe, every time I pull up a new page, I get, accept the cookie, accept the cookie. It's in my face all the time. And so I'm very aware now that, oh yeah, they are using my data. I am being tracked, et cetera, et cetera. In the US, you don't see as many signs of that, although it's obviously becoming more prevalent now. But that's the space. I think ultimately people are starting, as you start to see your consumer preferences show up more and more on the ads in the different places, you start to get that uneasy feeling of, oh, they really know who I am, or do I really want them to know what I'm doing?
I agree. I think regulators everywhere are in a race against time to keep up with the technology. We know the technology is changing exponentially. Regulators change linearly. I used to be a bank regulator myself. It's not a fault of anyone's, it just is. They are built to be slow and careful, and they're going to have to figure out how to speed up, but still get it right. They have the hardest job. But if they don't keep up, we will not see the full blossoming of fintech's promise, because people won't feel safe. Bad things will happen, there will be backlash. So it's just critical to create that regulatory environment where people can believe that they are protected and therefore can use the new things.
Yeah. So, Paul, what do you think? So more but better regulation is better than regulation we have right now?
Well, I think definitely in the US there'll be a lot more regulation, just because it's now on the political agenda. In Europe, with GDPR, we have a pretty balanced, I think, approach to regulation. I do agree with Claude that people in the traditional industries like banks who are in possession of data that they've legitimately acquired, they don't understand how to use it properly to provide better value services, and that's how some of these fintech businesses are able to get going in the first place. I do think for people like Facebook and all, there probably will be an evolution of regulation in Europe. It'll be linear, right? So it'll be a couple more years before there's more regulation. But I do think in general, data will be regulated more over time, because, as David said, when you're in the US, when you go online, you get these reminder emails of the last thing you looked at, and you realize, God, they really are watching me. So I do think there'll be a lot more regulation coming up, but in Europe it'll be a bit slower because we've already gotten ahead with GDPR. And the next set of rules will be all about monetization as opposed to actually collection and security.
So we mentioned GDPR a lot. We didn't talk about PSD2 as much, which is that mandating of having these open banking APIs. Now, the US has nothing comparable to that mandation. Nevertheless, businesses that claim to do that or do that in a certain way are valued enormously by certain card issuers. And so we're seeing money flowing into that space. So in an interesting sort of way, open banking is the next layer that we are going to be creating. Now, open banking is happening by regulation in Europe, by regulation in China, to a certain extent in Russia. There's very little done. It's almost all voluntary in the US. Now, one of the questions I have for you guys is we didn't talk about cybersecurity at all in this conversation here. Now, if I can create through PSD2 or a variety of other legislation endless entry points to the financial system of a country, am I creating potentially a single point of failure where the whole financial system of a region could collapse? And if that's the case, what regulation are we putting in place to make sure that doesn't happen? Because as we all know, cybersecurity, you're constantly trying to be 50 centimeters ahead of the fraudster behind you. But at some point, they may catch up. And in that case, the price would be very high to pay. So what is it that can be done in your mind, Joanne? Let's start with you.
I think if you ask regulators what keeps them up at night, the cybersecurity risk is probably the top thing. It's the hardest, most intractable piece of the puzzle. I don't think anybody has easy answers to it. I do think that regulators are starting to look at technology solutions as opposed to just policy solutions for some of this. I think there's promise in a lot of the new thinking on digital identity. A lot of people are working on how to enable the consumer to have more control over your data and to share it selectively instead of fully. There's a lot of new technologies developing on that. There's also a movement toward not centralizing all the data by regulators or anybody else. There's a phrase that is cropping up called the traveling algorithm. Instead of bringing the data to the center and running your technology on it, send your technology to the data where it is, new kinds of encryption to protect the back and forth. So I think there's promise in that space, but it's definitely high risk.
So you're saying the answer is not to make the system impregnable, but to make it resilient. So if
That's a good way to put it. That's exactly what I'm saying.
So Olga, what do you think of that? Is that
I do agree with John, and it's really for regulators it's nightmare, really, to think each time about cybersecurity regarding all projects, not only the projects which usually we do together with the regulator, but even when it's some big tech or fintech companies doing it. We use Sandbox for big infrastructure projects or for big really projects. We use our Sandbox, and we usually ask companies to go and just to test cybersecurity aspects particularly. But of course, I also fully agree that it's not the case to have one big data house or warehouse. It's awful. Usually we are thinking about resilience, as you said, and to have some kind of technical connection, but not to have everything in one place.
Claude, what do you think?
I don't think that we are creating through the PSD2s and others, we are creating a particular big cybersecurity risk. I would even argue the opposite, because you know what PSD2 has done is that it has forced traditional players to open up their systems through APIs, give third-party access to the systems, and then new jobs were created through payment initiation, consolidators, and so on. And I think that leads rather to a more fragmented market and more players, and traditional players providing fewer systems, and so I don't see a connection there with creating
not even a PISP being
risk.
hacked and a PISP that connects to all financial institutions.
Sure, but each bank has to make sure that its system and its APIs and its entry points are safe. So one would have to attack all these systems at the same time. And So I don't see the risks there. Of course, cyber criminality is the big topic. And as we move more and more to a digital world, we have to be mindful of that. I think that the degree of consciousness is still not high enough at the supervised entities and needs to be risen. And the fact
at
that
the supervised entities or the supervisors?
Supervised entities and supervisors, because if you think about today also having systematic attacks by foreign governments or by very organized crime, it's not far from thinking that a regulator will be targeted as well by an attack. But fintech can help.
So Paul, I'm certain that cybersecurity keeps you up at night in certain times. But do you think that by with open banking, etc., are we increasing that, or is it actually a step towards? It's actually better to have this openness.
I think as always in any system, the system is only as strong as its weakest link. So I think there'll be a lot more work needs to be done for a lot of the open banking platforms in terms of proving their security. That'll be the number one issue, the security credentials of the platform. It's not just enough to get a VC-funded model and have lots of marketing materials. I think the security piece of it will definitely require more work, because cybersecurity is a systemic risk. Okay, a small company going out of business is not a systemic risk, but a cybersecurity breach will be a systemic risk. I do think that open banking will necessitate further advances in identity management, because people give their data freely on Facebook and other platforms. They don't realize in the wrong hands your digital identity can be compromised in a couple of minutes, and that can be used to open bank accounts with any bank or any company like ourselves, anybody, right? Or access other people's information. So it doesn't take much, and if you've seen it all in the UK in particular with some of the data breaches, even in recent news, that it doesn't take much for a security breach to get people to pull back a bit. So I do think the regulators themselves and the participants like us will spend more time looking at identity management as the next step in open banking.
Okay, so the social dimension of cybersecurity is something that not people...
There'll be much more biometrics. There'll be like a biometric vault. There'll be more national identity cards, probably, which are more secure and biometric driven.
Try telling that to the UK government. Sorry.
Quick note, and I would have to
Very
agree.
quick.
Cybersecurity is going to continuously evolve. At the moment, usually the human link, I hate to say to the audience that we're the weakest link in the cybersecurity chain, but we are. And so we're going to need technology to help us to be more automated in that space. And then there'll be another vulnerability, there'll be something else. But the human interaction generally right now, if you look at a lot of the different breaches, you can point it back to some person, somewhere, relationships, or a breach of passwords and things. And so we just have got to get better on that.
Okay, I'm going to end up with asking you one question, and I want two answers, one word each, okay? What is the biggest opportunity and the biggest risk you're seeing with regulation in the next few years? And Paul, you never start, so this time.
The biggest opportunity in our business is the globalization of regulation. Particularly, we're more focused on Asia, and all Asian economies are now beginning to copy or mimic.
Keeping it very short.
And the biggest risk, from our point of view, continues to be cybersecurity and just general trust in new fintech platforms.
Claude?
I think the biggest opportunity is also an opportunity for us regulators to make use of new technologies. I mean, we've, for instance, embarked on a research project to use artificial intelligence to review investment fund documents. And so, we're going to make more use of that. The biggest risk I see is trying to regulate everything and trying to over-regulate and kill innovation. So that's the biggest risk.
Thank you. Olga?
The biggest opportunity, I think, to be innovative. For regulator, to be innovative is the biggest opportunity.
Yes.
And the big risk is really to exist as regulator, because maybe in 5-10 years we will disappear.
Wonderful. Joanne?
That was a good one. I think the biggest risk is that the regulators they're going to struggle to keep up. So being too slow and therefore either failing to protect us from some new bad thing or accidentally crushing a good new thing. But the biggest opportunity is there's a historic chance for a win-win like we've never had before, thanks to new technology, to make finance affordable and available and fair and transparent to everyone, and to regulate it in a very smart, efficient way.
Thank you.
For a bank in the fintech business, that conversation with the regulators in the US and developing the regulatory scheme, a huge opportunity for us in that. Biggest risk, I'd go back to cyber again.
Thank you very much. Thank you very much,
Thank you.
everybody. Please.